As we head into the back half of summer, many stocks take a break from their seasonal bull runs. In fact, the calendar is downright bearish. But it's also back to school season. So in this video, I want to outline the shopping season itself, back to school companies, and my top picks for the new school year. Class is in session. Hey traders, Tom Gentile here. Welcome to Patterns and Profits, where we look to discover patterns that repeat and profits that add up. We just hit 50,000 subscribers, so thank you for all of your support. If you're new to the channel and you find this information useful, do me a favor. Like, share, and subscribe to get all of my videos as soon as they're published. And one more thing, this is not investment advice, and past performance is not indicative of future results. So, the back to school or BTS shopping season represents the second largest consumer spending event of the year, trailing only the Q4 winter holiday season. Now, over the past decade, historical price performance really shows us clear, repeatable seasonal strength across specific retail, consumer discretionary, and tech companies between early August and mid-September. Now, the BTS and back to college shopping season is really, I call it non-discretionary in nature. It means it's very resilient, even in periods of economic tightening like we've seen this year. The total U.S. back-to-class spending reaches over $140 billion annually, and that's K through 12 and $100 billion for college. This places it second only to the winter holiday season in terms of total consumer dollar outlay. Now, when you break all this down, it looks like this. Electronic and tech is about $30 billion. Apparel and footwear accounts for $35 billion. And dorm and furnishings are around $14 billion. The biggest takeaway is, unlike luxury or impulse categories, parents view school supplies, apparel, and required tech as non-negotiable expenses. Even when budgets are tight, families will trade down to discounts rather than cutting out purchases entirely. And the timing window when all this happens is these buying patterns. Most are promotional campaigns that start as early as Prime Day, thanks to Amazon, and that starts to spill into the brick and mortar stores soon after. The financial impact hits corporate balance sheets in August, sometimes even before their quarterlies. So here's why this is only the beginning, because we have what's called the starting and finishing lag. While most consumers start browsing or buying early bird deals in July, data shows that 80% of families are less than halfway done with their lists heading into late July or early August. All right. The other thing is physical stores. They see a spike in traffic because back to school shopping retains that high brick and mortar traffic. Parents and students alike, well, they're now preferring more in-store visits because they want to get their clothes fitted right, they want to test the electronics, and they want to get this done correctly the first time, all right? So they want these checklists all done in a single trip. So keep in mind, these trips don't start until August. Complacency sets in. Finally, you got that earnings run up, all right, because big box realtors and specialty chains, they report their Q2 in mid to late August. Strong early store check-ins and foot traffic frequently drive analyst revisions and bullish stock momentum prior to the earnings release. So for retail, this quarter is just as important as the earnings in Q2. So while there's many different stocks that indirectly benefit from this window, I've broken down the top three segments of what I call the buying binge. Categories include value and discount stocks, apparel and footwear stocks, and of course, consumer electronic companies. Now, each of these I'm going to show you are publicly traded companies. They have years of expertise and years of data to look at. So first, the value discounters. And I'm talking Walmart to start. I mean, their seasonal dynamic is that they consistently dominate that K through 12 market supply due to price leadership, proximity to where the shoppers are. So as families look to stretch budgets, Walmart benefits from that one-stop shopping thing, which is grocery, electronics, school supplies, and their historical patterns they have a strong tendency to build momentum into late August as full basket sales reflecting Q2. And so you think about that, not just that, but their Q3 guidance also helps as well. Now, their competitor, which is Target, is much of the same, but they primarily look at that back to college surge. So they're looking at things like dorm organization, bedding, trendy college apparel, high margin impulse items. So as they do compete with Walmart, they try to distance themselves in a way that helps them as well. And it frequently demonstrates this in their sharp August rallies. The final of the big three that I think about is Five Below. Now, Five Below is a target market. They target Gen Z, they target preteens, they have low price points, they have trendy stationery, they have locker decorations, they have cool backpacks, they have tech accessories, which are lower price points. And so this is a high beta stock, and it does see historical strong August expansion cycles. All right. So that's the first of the three. The second are apparel leaders, and I'm talking about TJX and Ross stores. I mean, these are off-price retailers. They're for parents looking for brand name at discounted prices, because apparel accounts for over 35% of back-to-school spending. Off-price inventory really does accelerate during this time period. So when you look at something, areas like TJ Maxx and Ross, they historically rank among the most resilient retail performers during late summer and heading into fall. Also, Abercrombie and Fitch, Nike, they have seasonal dynamics because, first of all, A&F's seen massive turnarounds in their operations. They are going after high school and college brands and brand loyalty, while Nike still remains the dominant footwear destination for back-to-school footwear. When you take a look at their historics, footwear and fashion, well, they're big. They're big early August buying waves that go into September as well. The third of the three areas that I like is consumer electronics. And when I think of consumer electronics, I think of Apple. I think of their back-to-college promotions that they do, where they offer free gift cards, or they offer discounts on MacBooks or iPads, and they combine these with that anticipation of their September iPhone launch event. So August has been one of Apple's strongest seasonal run-ups. They frequently outperform the broader S&P 500 during this cycle that leads into September. So, and also their September keynotes. The second of the two is Best Buy. I mean, we're talking laptops, tablets, headphones, dorm appliances, not just Apple, but Android as well. And they see single dollar spends of $300 per student. So they see sharp acceleration from late July through August as well. Now, their tendency to rally is typically prior to their Q2 earnings release. But the million-dollar question, folks, is which historical patterns offer the best chance of profit based on their history? I got to tell you, I have an advantage over other traders when it comes to picking stocks. Not just knowledge, not just time, not just experience, but I'm talking about understanding the type of trader that you are. So for me, seasonality is one of my favorite styles of trading. No day trading, no meme trading, no squiggly lines to look at, just raw data. This shows me the best days to buy and the best days to sell on pure calendar history. And I've taken millions of data points and I've stored them into a seasonal scanner I call the money calendar. That means we could take the guesswork out of what to buy and when. And most importantly, take the emotion out of trading. Now, let's take this information from August to September. Top stocks, the top three are, number one, Walmart. Consistently delivers higher stock prices from beginning of August to mid-September. In fact, 9 of the last 9 years, 9 of the last 10 years, this stock has been a winner, as you can see here on the screen. My second of the three is Ross Stores. This is another stock with a 9 of the last 10 years performing, moving from August into mid-September. Its only loser was 2021, but it's had a few years, and the last few years have had what I call a trend reversing course. And probably as number 3, my favorite pattern has to be TJ Maxx. They've been killing it seasonally during August and September. And if you take a look here, you can see all the results speak for themselves. So next question, stock or options? When you trade stocks, trading them on patterns like the calendar is relatively easy. You buy on the start date, you sell at the end date. There's really no other risk factors to consider except for your stock price risk, which is considerable. But these trades can be entered and exited ahead of time with the right broker. So firms like Schwab and TD Ameritrade have what's called conditional or contingency orders that allow you to put the dates of entry and exit in ahead of time, eliminating the errors caused by, well, forgetfulness. What about options? Different matter altogether. Whether you're a simple call buyer or you use spreads, 2 things matter more than anything else: your projected price and your projected time in the trade. And a scanner like the money counter helps to simplify this. Projected price can be the average return on investment over the decade of the pattern. As for time, we use the end date of the pattern and look for an options expiration date that is closest to that end date. There you go. I hope you enjoyed this back to school video, and I hope you found it useful. If pattern trading interests you, then check us out online at www.patternsandprofits.com. You'll get more on pattern trading, on scanning, and on options education. Thanks for joining me. I'll see you on the next one.